Hi, I am Paul Carroll, the editor-in-chief at Insurance Thought Leadership. I'm delighted to be joined today by Mike Morrissey, who I've described as a friend of some long-standing by now. We've known each other for a fair number of years.
Indeed.
Mike is a giant of the industry. He was the CEO of the International Insurance Society for 12 years. Before that, he was an active corporate member. In what is supposed to be his retirement, he has become the chairman of the board at Pachenko Life Insurance Company. And specifically to the point of the conversation today, he moderated a panel at the recent Global Insurance Forum of the IIS on a topic that is near and dear to my heart, and I think ought to be near and dear to the hearts of many people now and going forward, ESG. So, Mike, thanks for joining us. It's delightful to see your face.
It's always a pleasure to see you and talk to you, Paul.
So, as a starting point, I watched the panel and enjoyed it very much. But you were closer to this than I was. What were the points that really stuck out to you in terms of the discussion you had on ESG?
Well, the overarching idea of that session, which had complementary thought leaders from different aspects of the insurance industry around the world, was that while ESG is to many people a shiny new thing, it's in the insurance industry's DNA. The insurance industry has been proactively promoting environmental, social, and governance principles for a long time, long before proxy advisory firms started keeping score and consulting firms started offering products to make companies either look or actually be better. So, whether it's E issues, risk mitigation, climate change effects, climate finance, promoting the UN SDGs, or whether it's S priorities, like building sustainable communities and having a broader stakeholder awareness, or whether it's the G governance aspect of using the industry's investment portfolios to promote sustainable investing and infrastructure investing. This is all part of the industry for decades, for years, and not surprisingly, then the industry is a thought leader for the rest of the world now that these concepts are getting more popular.
And I think of myself as a fairly international fellow, but you had me beaten hands down in every possible way. I was intrigued to help with a book that some partners at a big consulting firm were doing, and to talk to them about this, and to find that while this was relatively new to the US-based partner, it was old hat to the one based in Amsterdam. My sense is that this is very much something that is moving into the US, but is already pretty fully fledged from the other continents of the world.
Well, that's right, Paul. And that's why the thought leaders in this field tend to be the Swiss Re's, the Allianzes, the AXAs, Lloyd's, and to some extent even the Tokyo Marines and the Dai Ichi Lifes. Part of it's political. Climate change still has elements of controversy in the United States. So yes, this is definitely a series of ideas that emanated more from Europe and even Asia, and are more slowly being completely embraced in the US.
So you some years ago introduced me to a really interesting fellow, Rowan Douglas of Willis Towers Watson, who was leading something back when you were still the CEO of the IAS, the IDF, in conjunction with the the United Nations. I believe you even testified, if that's the right word, in front of the United Nations as part of that. So that's really focused on climate and resiliency. I just wonder if there are any updates there you want to share, because my sense is that that was a pretty robust effort.
That public-private partnership between the global insurance industry and the UN and the World Bank that came to be called the Insurance Development Forum was an important recognition that the insurance industry doesn't have the capital base or the political influence to provide major solutions for things like climate change. But at the same time, political institutions don't have the expertise. And so by working together, we can make a lot more progress. Yes, it was the UN General Assembly in 2015 and 16 that I was able to say a few words, and those public institutions have really embraced the insurance industry in a way that they never did before, as having a place at the adult table in the discussion of what to do about everything from disaster recovery to food and water security and all the many aspects of making a more sustainable world that the insurance industry has, real expertise in.
And it seems to me that, at least in the US, the climate, if you will, on climate change has changed recently. It feels like the storms are now so insistent. That derecho that pretty well wiped out Iowa last year takes it beyond those of us who live in California and think about earthquakes a lot, and the people who live on the Atlantic coast and have to worry about hurricanes a lot. Is that your sense that there's much more purchase for that sort of thinking now than there was 3, 4, 5 years ago?
Yes, I think the discussion has evolved. I wish it had evolved sooner, but has evolved from whether there's climate change to what do we do about it, and less finger pointing, although still some finger pointing about what the root causes are. There's still some debate in the U.S., probably not elsewhere, about whether climate change has caused some of the extreme weather events that we've seen recently. But there's no debate anymore about whether climate change exacerbates these extreme weather events. It's made the floods worse. It's made the fires worse. I hope your home isn't burning as we speak. It's made the hurricanes worse. So, there's a grudging but building consensus even in the US about these things.
And it seems to me that insurance is really well positioned to send signals about the future. So my longtime colleague Chunka Moy, who started doing some things with the IIS, has a line about how in Florida you may think you have a 30-year mortgage on a home, but you really have a 1-year hold on that home because you don't really know what's going to happen to your insurance rates. And if insurance goes through the roof, then even if you're situated nicely in other ways, the house is still going to become unaffordable. So it seems to me that with the expertise the insurance industry has, it's possible to start projecting out and sending those signals that can help the market move people in the right direction.
Well, if you think about it, Paul, what the insurance industry calls underwriting, some political people would call discrimination. Certain areas are more prone to car thefts than others. If you charge everybody the same rate for their auto insurance because of political pressure, you fail to provide real risk-adjusted pricing. Similarly, there have been successful efforts in places like Florida to hold down the price of homeowners insurance. But where the industry is allowed to do honest risk-adjusted pricing, they send very strong signals. They send strong signals to coal companies. They send strong signals to oil companies about risks that the companies may not want to acknowledge. But keep in mind, in Benjamin Franklin's day, the insurance companies refused to invest or to insure certain kinds of structures if they had trees in front of them because they were more apt to catch fire. So the insurance industry has been ahead of the political institutions, in making insurers recognize what their risk really is and pay for it.
Right. Now that I think Ben Franklin was a tough old coot. I mean, the way I remember the story, I don't know if this specifically was the origin of Fireman's Fund or if that was just a name picked up. But basically, if you contributed to the local fire department, then if your house burned, they would show up. And if you hadn't contributed and your house was burning, lots of luck.
Well, Paul, that's why fire departments are typically called fire departments, because they were originally departments of the insurance companies. And you're exactly right. Before they became the service.
That's interesting. And I'm intrigued to see what happens once flood insurance prices are allowed to finally start to move toward the market. What is your sense of how far that's going to go in terms of sending the right signals, and how quickly?
It's going to be slower than it ought to be, but this time it's for real. We started to see pricing for coastal properties go up. They need to go up more. There's already an impact on sale prices of properties on the Jersey Shore, for instance. The zip codes along the Jersey coastline, the sale prices are not close to keeping up with other inland areas. So the signals that the industry sends through its risk-adjusted pricing are starting to take hold, partly because the political entities realize they can't be and shouldn't be the insurer of last resort for natural disasters. They simply can't.
So I'll be interested to see what happens in California. I think there's some denial going on about what's happening with wildfires, and the tendency is, as you've said, to suppress the ability to let the insurance prices reflect what's really going on in the market. So I think that's a rearguard action that our friends in the California government will fight for a while, but will eventually have to give up on.
That's right. That's right.
I mean, the market wins eventually.
The market wins eventually, and it'll be slower than we may like, but it's the reality of this is gaining momentum now faster than any time I've ever seen in my 50 years in the business.
And the environmental piece is the one that I'm probably most focused on. As I mentioned, as we were talking ahead of this, I just published a book about a perfect future. And part of the idea of that is figuring out a way to deal with climate change, which is a significant problem. But the other pieces of ESG, I think, are interesting as well. And I think that the companies, whether it's in the insurance industry or elsewhere, that do the best job of articulating their vision have a chance of winning. I mean, there is such a war for talent these days that if insurance companies, which have long had this noble purpose, as people tend to refer to it, to the extent that they can get out there and let people know what that is, that sort of social vision, I think, could be very powerful for the insurance industry.
Well, the insurance industry is one of those businesses, like my old business, investment banking business, where the assets ride up and down on the elevator every day, or these days maybe work from home every day. But very few people went away to college saying, I hope I can get a job in the insurance industry when I'm finished. But the industry, first of all, in all my time in the industry, I've never heard CEOs and board level discussions with such urgency about talent acquisition, training, and retention as the last couple of years. And I've never seen so much interest on the part of undergraduates in particular in understanding that this industry does a lot of good in the world. Frankly, when I was getting out of business school at Dartmouth, we didn't think about these things. We didn't think about which industry makes the world better. We thought about which industry can we work for to best provide for our families. But now a lot of young people, I see it in the risk management classes that my wife Joanne, who you know well, teaches. People are excited about going into the industry. They're excited about climate change. They're excited about risk mitigation. They're excited about investing in the world's sustainable future. So I think there's a real change going on here.
I found it interesting. My younger daughter graduated from Yale 3 years ago, I guess, because she's finished law school. And in an introductory economics class she took there, they actually spent about a week on the economics of insurance. And I thought, whoa, that was not there when I was taking economics way back when. So I don't know how many people were thus encouraged to go into it, but I will note that I deliberately went into insurance. So I spent a long time, as you know, at the Wall Street Journal, and then worked at a consulting firm that pioneered the idea of digital strategy. And about 10 years ago, thought, well, what areas are really important, but that haven't really been innovated yet? And insurance was one. So when I bumped into our friend Dave Diaz, who had founded Insurance Thought Leadership, I thought, okay, this is something I can lean into. So you have met someone who actually fairly late in the career decided that insurance was the coolest place to be.
The industry is better for your making that.
Well, I appreciate that. I also think, just to second your point, and I know we're running out of time here, but I think that there are a lot of things that are happening with the digitization of the industry that make it a way more interesting place. So as somebody wrote for me not too long ago on the talent issue, if you tell somebody, I have a great career for you, you're going to spend a long time going through contracts, looking at the fine print, looking for this kind of stuff. How about it, Mike? That's one thing. But if you say you're going to have all these AI tools, machine learning, the Internet of Things, all these things, you can basically be a rocket scientist and you can help reinvent the world. So, which appeal is stronger?
I think it's pretty clear. There's another point I'd like to make, if you don't mind, about insurance and ESG. When people talk about insurance in the environmental, social, and governance principle world, they think most about the risk management side. But with the industry having over $30 trillion of invested assets around the world, long-term investors, they're not hedge funds, they're not mutual funds, along with pension funds, they're the only true long-term investors. They are just awakening now. Took a long time, but they're just awakening now to the fact that the two parts of the industry, the risk management part and the investing part, can work together to make investment decisions and investment policy changes that accelerate the adoption of the SDGs and accelerate the building of a sustainable world. Now, this is a unique aspect. I mean, the pension funds have the money, but they don't have the risk management expertise. So the insurance industry is the only long-term investing sector that has all the tools, to use the massive investment leverage to do good things for the world. So it's really, there's never been a better time to be in the insurance industry as a career. There's never been a better time to leverage the attributes we have if you're in the insurance industry. And a lot of those opportunities are focused on what we're talking about today, ESG.
I could not possibly agree more. And I was going to try to summarize, but I think you just did that perfectly. So I'll just say thanks so much for taking the time. It's always great talking to you. I hope people who watch this enjoy this 10th as much as I did. Great to see you, Mike.
I hope we have a chance to talk again soon, Paul. Thank you.
You bet.
Bye now.